Now we are going to be looking at types of support and resistance. So in every candlesticks being created in the market, so if we see two candlesticks being created, those two candlesticks might create a support or a resistance. So they might present this one of these four formations right here. The open close resistance, the bullish open close support, then here we would have what? Guess like it's a little bit redundant right here, because if it's a bearish open close, then it's obviously going to be resistance, but fuck it. Now you see that here, this is going to be a what? This is going to be a resistance right here. And this is going to be a support. This is a resistance right here, open close candle. This is going to be a support. So as I said, when the market is moving, it's going to always present one of these two setups right here, one of these four candlestick formations. So let's just look at this right now without even like looking at some other things, but let's just look at this. I'm going to skip this one because the way that it was formed right here is just going to confuse a lot of people. But looking at that, let's just skip ahead a little bit. So looking at this, let's just start right here. This is the first candlestick. Let's just start right here. So we have a bearish candlestick. We're either going to see a bullish candlestick after or a bearish candlestick after. So what do we see right now? We see that we have a bearish candlestick after. So this becomes a resistance right here. Then looking at this, we see that the market gives us a bullish candlestick. So this becomes a support right here. This becomes a support. So let's just wait and see. Okay, it gives us another bullish candlestick. Then this becomes a support right here. And as we can see, we see that the market reacted from that point a little bit. Then you see that here, now we have this support right here now. So what do we see right now? We see that we have a bearish candlestick, and we'll say that we are going to be looking at the what? We're going to be looking at the close of the candlestick right here. Looking at the close of this candlestick right here. Then here, what do we have? We have the market creating the resistance, but it fell to what price? And we still had some support being created here. So this is a support being created. Then what do we see? We see that here, the market presents a bearish candlestick after this bullish formation right here, which creates a what? Which creates a resistance. So it's right now is very irrelevant. The entries right now, guys, are just irrelevant. So right now the entries and the other things, the confluences, that are irrelevant. What are we looking for? We're just looking at how the market creates the formation, and I'm just trying to prove a point that the market is always going to create, with two candlesticks being presented in the market, the market is either going to create a support or the market is going to create a resistance. And I told you that entries and other things that are very irrelevant right now. So as you can see, we do have a what? We do have a resistance being created right here with these two candlesticks right here. So with these two candlesticks, we have a resistance being created. So looking at the next candle, what do we see? A bearish candlestick. Then here, this becomes a what? This becomes a resistance. So as you can see, every time the market is always going to present one of the four formations that we were looking at right here. One of these four formations right here. So now you'd ask yourself, why do they call it the A resistance? Why do they call it the V support? Here, when you go to the line chart, let's just start with the line chart. Just looking at the line chart, what do you see? The A's is a little bit self-explanatory, because if it's an A, it's going to be like this, which means it's a resistance in the line chart. Then if it's a V, then this is going to become a support. So you only need like two candlestick formations. So you don't even need like basic SNR. You only need two candlesticks to present a support or a resistance. That's what we talked about previously. So now looking at that, now let's just first look at our A's. Our A's, you're going to mark everything out. So right now, going to mark everything out. This is an A right here. So this is resistance. This is an A right here. So this is resistance. Here, resistance. Here, we have resistance. Here, we have resistance. Here, we have resistance. And here, we have another resistance right here. As long as the market is going to give you a formation like this, that's going to be your resistance right here. So you can even mark it out in the chart. So now, when you are looking at your V formation, so with these V formations right here, you would see what? You would see the market giving you what? Something like this in the chart. This is going to become your support. So by that now, what are you looking for? This is your support. This is your support. This is your support too. And this is the resistance right here. This is the resistance right here. This is a resistance right here. So every band that you will see, or every shape that looks like this is going to be your support. Then this is going to be your resistance, and this is going to be your support. So here you anticipate a reaction to OK, and here you anticipate a reaction on introduction to OK right here. Now looking at that, how do they look in the charts, in the candlestick chart? So how do they look? As you can see, we have a bullish candlestick. We have a bullish candlestick, then a bearish candlestick. This creates a what? An A right here, which is a what? Which is the resistance. Then same thing applies, same thing applies, same thing applies, same thing applies, same thing up everywhere. Everywhere. If you see like a bullish candlestick, the bearish candlestick, just know that that is your resistance. Whether the market is going to react from it and do some other things is irrelevant right now. So if you see a bearish candlestick being created, a bullish candlestick first and a bearish candlestick after, just know that this is your what? This is going to be your resistance right there. Then when you see a bearish candlestick being presented first, then you see a bullish candlestick, then this is going to be your support like this. Then this is going to be your support too. Bearish candlestick first, bullish candlestick after. This is going to be your support again right here. Your support again right here. Your support again, bearish, bullish. Then after that, bearish right here, then bullish. Bearish right here, then bullish. Then this is going to be your support. So that's how you mark it out. So what happens now if the market, because the market is not always going to present like a bullish candlestick and a bearish candlestick. The market is going to give you something like this right here. Bearish candlestick, then another bearish candlestick, because the market only has two options. Very simple. Very simple. It's hard when you get to the setups and so forth, but now understand the bias, understand how you're going to identify your bias and how you're going to identify your storyline and your SNR. So the market only has two options. If you see a candlestick like this one right here, let me just take this one out. Let me just clone it. Yeah, I want it right here. If you see a bearish candlestick being presented, the market is either going to present a bullish candlestick after or a bearish candlestick after. But if it fails to present that bullish candlestick, it creates another resistance called an open close resistance right here. Two bearish candlesticks right here. The close of the first candle, don't ever forget, the close of the first candle, that's where you mark your support and your resistance. So that's going to be your resistance right here. So anticipate reactions, then this is going to be your support. If the market starts pulling back right here, you can even anticipate some reactions to occur. So in the line chart is very, very different. So in the line chart, it's a bit tricky to identify it because it's just a small band being created in the market. Not a big band. It's just like, you see, a straight line like this. So if the market has to present something different, if you're going to be looking at the market presenting an opposite candlestick, then the market is just always going to present something like this, or the market is going to present something like this. But if it presents another same candlestick right here, so two bearish candlesticks right here, then you would see a band a little bit on the line chart. So let me just show you an example right here. We see that here there's a band created. We see that here there's a band created. We see that there's a band created right here. We see that there's a band created right here in the market. So by that, if you can do like this, you see that these are just bullish These are just bullish candlesticks being presented right here, and you can see that there's the other one right here. So you can see that this one wasn't very clear, but it was there. So you can use both. There's nothing wrong with combining, looking at the line chart and the bar chart. So right here you can see what the market did right here, gave us a reaction and so forth, but irrelevant right now. So you can see right here, this was a support that failed toward right here. So you see it becomes a resistance right there. Then here we do have another one right here. So you can see that it's very clear, but you can also use the line chart. So with this open close, you can just go to the candlestick chart. Just look at the candlestick chart because it's much more clear than this line chart right here. But when you're looking at the line chart, look at the line chart to identify these A's and V's and so forth. So there's some instances that the market fails to what? So there's some instances when the market fails to respect the resistance right here. The market just closes above the resistance. So that resistance, there is a possibility that this becomes a retest right here to the upside. Then here, if it fails to become a support right here, then it would just become a resistance right here to the downside. That's just one of the possibilities. So right now, these are just the basis of understanding what is SNR. And let me just show you an example of the break and retest. The break and retest right here. So here's a break and retest. Here's a break and retest. Let me just clear most of the things out right here. What do you see right here? Can you mark out your support or resistance? You can see that this was the resistance. You can see that this was a resistance right here. But you see that this resistance failed toward right here. The market closes just above. Then you see the market pulling back right here, rejecting this support right here. Then you see the market starting to push to the upside. That's what we call a break and retest. Then again right here. So let's just say that there was no reaction right here and so forth. The market just closes below this support right here without giving us a reaction. Then you see that here this support becomes a resistance. It's so to the downside. So it's very clear. It's very clear. So here, this is an A. Check. This is an A. That A fails toward price. The market closes above. Then you see the market pulling back right here at this candlestick. So you see the market pulling back right here. Then it starts pushing to the upside. So the line chart would only present the close of the candlestick. So that's what we are always looking for at our support and resistance. So basically, yeah, that's the examples of the support and resistance and so forth. And the other one that we have is something like this. We have an A right here being presented. Then most definitely, if the market is going to reach this point, it's definitely going to create, notice either 100% sure is going to present a support. Unless if it's a huge week like this, then that's irrelevant for now. But it's going to present a bullish right here support, or which is a V right here. So you see an A combining with a V. Then that A fails toward price right here. That A fails toward price right here. The market just shoot to the upside. In anticipation of a what? Of a break and retest, the market fails to do something right here. Fails to push to the upside. The market just shoots to the downside from them. So for you to mark this left shoulder right here as a resistance for when the market is starting to pull back right here, we'd want to see the market close below this A right here. We'd want to see the market close below this A, then going to anticipate your sells. So it's just something like this. No, it's a little bit confusing right now, but here's what I mean. Start right here. So this one is just a different scenario, but let's just start with the one that we talked about right now. Let me just look for it. Okay. Here is it right here. Here is it. We have a bullish candlestick. We have a bearish candlestick in the line chart. That is our resistance. Then what do we see the market doing? Okay, that is our resistance. Then let's see the close of this candlestick. So in this close, what do we have? We do have a V being created right here. So here, we see the market doing what? We see the market failing to respect this break and retest right here, which is this setup right here, which is just this support and resistance right here. It fails to respect the break and retest, then the market just shoots to the downside. So after shooting to the downside, it should take out this support right here, which is a V. Looking at this, you see. So we have our A, we have our V, we have our other A right here, but the one that we're focusing on is this one right here. So for you to validate this A right here, the market should close below this V right here. Then we can even validate this A right here as a left shoulder or a Quasimodo level that you're going to anticipate some reactions to occur at that point. So it's just very simple. I know that it's a bit confusing, but it's just very simple. So an A, I want to see something like this. So an A, a V, it failed to give us a break and retest right here. It shoots to the downside, doesn't react when the market is going to the upside, doesn't react when the market is now starting to push to the downside. But the market closes below this V right here. This is going to become your left shoulder right here. And in that left shoulder, you would have your resistance, as you can see. Resistance right here. Another example is just this one right here. Now, it's just going to be different because firstly, we do have what? So what do we have first? We have the market giving us this A right here. So that A is irrelevant for this example. But after, we have what? We have a V. So as we have this V, the market closes below right here. So this becomes what? Left shoulder. As you can see, left shoulder. Then by doing so also, you see that here, this becomes a V that failed to hold this support right here, that failed to present bullish price, and now is failing to give us what? Bearish price action. So for us to validate this left shoulder right here as a support and resistance level, we would want to see the market closing below, want to see the market closing above this A right here. This A right here. So something like this. Then this is going to be our left shoulder. That's going to be our left shoulder right there. So as you can see, left shoulder, we see some reactions occurring. Then again here, support failed to hold again. Resistance failed to hold right here. Then it became support, it failed to hold, but it clearly closed below this right here, this A right here. Then this becomes your what? Then this becomes your resistance right here. This becomes your resistance. So I hope everything is clear. You can just go through the market, just do a couple of back tests and so forth, because I know that it's a little bit hard for you to understand one concept just watching it once or so forth. And I know that there's some couple of people who have a background with this SNR and so forth. So in this next video, we're going to be looking at, in the next video, let me just double check something right here. So in the next video, we're going to be looking at what? So you're going to be looking at establishing a storyline. So establishing a storyline, that's where you're going to be looking at our introduction, the way that I was explaining it, but just going in depth and looking at the confluences. That why would you look for sells right here? Why would you look for sells right here? Why would you look for buys right here? Why would you look for buys right here to the upside? So that's some confluences that we need for us to even take this trade.